Good morning, everyone. Once again, this is Black Forest coming in with another market analysis video. This morning, we're going to look at the British Pound USD. But before we get started to break down this first pair, we have to say that this video is for economic purposes only. This is not financial advice. But we all know why you guys are here, which is to find good, credible Forex content to help improve your ability as a trader and to help increase put some money in your pocket, especially in these inflationary times. Okay. Now, with that being said, let's go ahead and break down this currency pair. All right. Now, before we get to talking about what's going on with the with the Great British Pound and USD, before we get to talk about what's happening on the chart physically, the technical analysis, Blackforexgroup would like to talk about the fundamentals with the British pound and the USD respectively. So since I've been repeatedly saying what's been going on with the USD, we'll continue to explain. We'll start with the British pound. Okay. Now the British pound is the currency for Great Britain, also known as England, the United Kingdom. Okay, and its country was suffering from inflation, just like the most of the countries that make up the G8 are suffering from inflation. Also, it is also suffering from high gas prices too, and is also suffering from like the reverse negative ripple effect of the sanctions that they placed on Russia. They did place sanctions on Russia, thinking it was going to hurt Russia's economy very bad. Now, there was an initial hurt in the Russian economy, but they kind of absorbed it up pretty well. And it seems like there's more hurt happening on the United Kingdom and on the entire EU and the entire European continent's business and the economy as a whole than is actually hurting Russia. Okay. So, due to combat all this, the United Kingdom's government did decide to increase its interest rate from 50% to 75%, which we did see an initial boost up. But we did get some very we got some information that we're gonna have to take a little bit of time to break down. So this video may be a little longer than what you're typically used to watching. Okay. So as of this morning, we had high numbers come out for the CPI, came out at 8% and 6.2% from it previous being at negative 0.1% and 55%. Okay. Now, in a non-inflationary economy, those is good numbers that will cause it to actually get strong. But when you're in an inflationary economy, those numbers can mean the opposite and cause your currency to become weak. It is the consumer price index. Is the price, the average price consumers are paying for everyday goods. Okay. So when you don't have inflation going on, and you have a high consumer price index, that means the economy is growing and your currency is getting stronger. But when you have inflation going on, an increase in consumer price index is just nothing but showing how bad your inflation is. Okay. And being that we've had these high numbers, this shows that the inflation in the UK is very, very bad and out of control, a little bit worse than what it is in the United States. Okay, so I would not be surprised if they start to take to increase more economic measures to try to bring down those prices. Okay, so that's what's basically going. Then also we also have the overall FUD, fear, uncertainty, and doubt surrounding the entire European continent's economy. And being that Great Britain is no longer in the EU through Brexit, the EU is still one of its major trading partners, and the entire EU economic sentiment is very weak. Also, too, so when your closest trading partner is weak, you're going to also feel that in your economy. So as you can see, you have several different factors going into play that's going to happen with the British pound. Okay. Now with the USD, as we said in previous videos, it does have the dark cloud of inflation hanging over it. It did have some poor economic news come out at the latter part of the trading week. last week, and we also had some poor, and we also, excuse me, we do have some economic news coming out around 10 o'clock this morning Eastern time. So we're going to have to see how that plays out. But one thing that's happening with the USD, there is a lot of talk of the gentleman named Powell, who is the Fed chair, talking about rapidly becoming, having, excuse me, is talking about more aggressively combating inflation to bring down the prices on consumers' goods much rapidly. Okay, because I'm pretty sure. I mean, because I didn't go to college to become an economist by trade, but I can kind of see the writing on the wall with this myself, which is that if they don't get this under control, we could be heading towards a recession. And they don't want that to happen, especially with the way the global economy is looking, because if America goes into recession, then all of the nations in the world will go into a recession. And this recession could change the fabrics of many lives in many countries. Okay. So we're in a situation where if the economic policies in place and the increase in interest rate does not combat the inflation very expeditiously and very aggressively, then we're going to be in a situation where the US dollar is going to become much weaker due to uncertainty surrounding the US dollar and the FUD that's going to come with it, which is the fear, uncertainty, and doubt. But if we are in the situation that the economic policies do start to combat the inflation very aggressively and very fast, expeditiously, then we will start to see an increase in the strength of the USD that's going to be very aggressive. Okay. And not to be funny, I'm going to be quite honest with you. They do not want to go into an election year with a poor economy, looking like Trump is going to be the front runner for the Republicans again. And it's not going to be a good look. It's going to look like it's going to be another sandbox fight. Okay. So, with all that said, now let's break down what is physically going on in the chart. We did have an aggressive movement to the downside once we had the full-scale invasion of Ukraine by Russia, which brought weakness to the major three which brought three weakness to the major three European currencies, which is the euro, the British pound, and the Swiss franc. Okay, now we did have somewhat of a push up, but this push up is not as aggressive or have a lot of momentum as push down. It's kind of a choppy push up. So basically, this is more so retracement than anything else. And like I said in the previous videos this week, that we could get as high as this area here before we started to come down, which we are looking at is happening right now. Okay. So what may happen is we may come down to this area here, have a pathetic push up before we continue to go down, or we may get back to this area here, have a pathetic push up before we continue to come down. Okay. So, is there a possibility that this can be a sign of price turnover? Is it possible? Yes. Is it probable? No, because the fundamentals are going to have to drastically switch. With all this talk of combating inflation very aggressively from the American government, mainly the Federal Reserve and the gentleman Powell, saying that they're going to combat this very aggressively. And with the basically prices getting much out of control for the citizens of the UK and still having a lot of fear, uncertainty, and doubt with the European economy, we're looking like we're going to continue to go towards this downside until at least we get some ceasefire in Ukraine. Okay, or some positive uh, peace talks. So we may go down as far as here before we have a pathetic push up and continue to go down, or we may go as far as down as this area here before we range it out and have a pathetic push down. Okay, or we could range out in this area here and then start to go down. Okay, so we'll have to wait and see how these things play out as the mid to the latter part of this trading week goes through. All right. Hope that information was helpful for you guys. Happy trading.